Vitale, American Retirement Advisors, for a report week ending January 31st. Let's talk about stocks. The equities declined around the globe due to fears of the Chinese coronavirus and its impact on global economic growth. S&P dropped 2.1, Russell 2000 declined 289, and NASDAQ was at 1.75%. International, the EFA was 2.5 reduced. In the epicenter of the illness, the emerging market sector, the MSIC fell 5.9%. Within the U.S., utilities and consumer discretionary were the best performing sectors, while material and energy were the poorest performers. We're seeing a nice rebound this week as the markets have already made up for much of the losses from last week. We're up over 450 points today. We'll see how that continues. Talk about fixed income. Interest rates dropped on fears of a slowing global economy, with the benchmark 10-year Treasuries rate dropping 19 basis points to 1.51%. At its first policy meeting for the year, the Federal Reserve stood flat on interest rates, and Chairman Jay Powell characterized the economy as in a good place. So the central bank cut rates 3 times in 2019 and indicated last year it would probably leave its benchmark borrowing rate unchanged for the year. With that in mind, so we're looking pretty good on that, but looking at the 30-year fixed rate mortgage average, the rate right now is averaging 3.51 during the week ending January 30th, which is down 9 basis points for the week, nearly 1 full percentage point lower than it was a year ago, following the direction of the U.S. Treasury note. Looking at commodities, the gold is an endowment series in precious metals holding that we have saw prices rise to the highest levels since nearly 2013. So global holdings in gold-backed ETFs have more than doubled since 2015 for a total of $141 billion. Negative bond yields overseas, together with the second highest level of buying by central banks in 50 years, have been a key driver to rising gold prices up. Looking at economic data, the GDP rose at 2.1% annualized rate last quarter of 2019. Matching consensus estimates, and even with the prior quarter growth rate, imports dropped 8.7% from the quarter previous, after rising to beat the increase in tariffs on Chinese goods that went into effect in September. Now, new orders for durable goods products designed to last at least 3 years rose 2.4% in December from the previous month. The increase was driven by defense orders during a month when Congress approved an increase to military spending. This marked a reversal from 3% drop in the prior month. Let's talk about company news and how it's doing in your portfolio. AJ Gallagher, a G50 holding, reported earnings that beat expectations and noted that momentum in the insurance brokerage was continuing, so shares rose 6% for the week. Chevron Corp, which is a G50 and a Core Select holding, announced an 8.4% dividend hike, marking its 33 consecutive year of dividend increases. The stock yields rose 3.2% on the new rate. Now, ServiceNow, which is a G33 holding, beat revenue and earnings expectations, including 35% growth in last quarter's subscription revenue from its cloud workflow company. Management also guided a 2020 revenue growth to 30% ahead of consensus estimates. Shares rose 9% on that report. As always, if you have any questions or need to meet, please call us at 855-756-5700 or visit us online at aradvisorsinc.com. Thanks and God bless, and we'll talk to you soon.